Nice to have you, Ezechi. I've seen some of your sessions already, and I'm glad that you joined us today. You are one of the founders of, you know, Impactx Capital, right? And you're a serial entrepreneur. So before we are starting, would you like to say hi and a little bit talk about yourself?
Absolutely. So look, it's a pleasure to be on this call today, and it's great to be able to speak to your cohort as well. My name is Ezechi Britton. I'm also known as Ez. I'm one of the founding members, principal, and the CTO in residence for Impactx Capital. So a little bit about myself before we go into the fund. As you said, serial entrepreneur and actually a technologist by trade. So I spent over 10 years as a developer in the investment banking space. I then co-founded a fintech in the UK called Neighbour, which is a multi-award-winning fintech company that provided salary-deducted lending opportunities to UK-based employees. I did that for about 5 years. That was a company that raised over £200 million and provided over £170 million worth of lending facilities to UK employees. And then post Neighbour, I found myself very much focusing on what I refer to as a diversity and innovation space. So very much around diversity and inclusion and helping to give people from diverse and underrepresented backgrounds greater access to both meaningful employment, but also helping them to grow and build and develop their own startups through my time at Impactx. Impactx is a venture capital fund supporting underrepresented entrepreneurs across the UK, Europe. We also have done some investments in the US as well. When we say underrepresented, we mean by virtue of venture capital allocation. So across Europe, historically, 96% of funding has gone to white men. And if you don't fall in, if you fall outside of that 96% into the 4% that isn't in that category, you qualify under Impactx. And that's really, we'll touch on what do we mean by impact, but those are the founders that we're looking for.
I mean, I really like your story, and I love investors who are coming from entrepreneurship backgrounds because we work with a lot of entrepreneurs. Kind of, I'm an entrepreneur myself, let's say. I mean, at least I founded Hackquarters myself. I raised some capital. I think that it's not the most scalable business in the market, but we are doing good and we are growing, which is a nice thing. At least you know what they are dealing with. And in terms of inclusion, it's really interesting for me because starting from like 2010s, people start to realize it because when you look for a certain aspect, you always see like, yes, you are losing like 5% of people, 10% of people because they are Black, because they are women, because they are disabled. And then you realize that all of those minorities is actually the majority of the whole ecosystem that we have. But that's why we see a lot of diversity focused funds, programs, and I love it. We try to support it with all of our hearts. We would be happy to share all of our like deal flow or any kind of help we can do during your fund. I mean, you already talked about Impactx. So what is impact investing? Because it's also some kind of a topic that people don't tend to understand because they sometimes think it's like NGOs, it's like giving some money for people to grow their business. So can you tell me more about impact investing?
So it's simple and it's complicated at the same time, because the simplest definition of what is impact investing is investing in a way that has impact, right? Very, very simple. But what is that impact, right? What does that mean to you? And I think it means something different to different organizations. From an Impactx perspective, the impact we're looking for is to both support underrepresented entrepreneurs and to drive job creation for diverse and underrepresented people. But we're in essence a double bottom line fund in that we are a fund. So when we invest, we are looking for a venture scale return. So we're not a grant fund. We don't provide scholarships or anything like that. We're not a charity. We're not an NGO. We are a venture capital fund that invests for a financial return, but we do it in organizations that we feel will have a positive impact on the world. And even that can be controversial. For example, one of the things that we want to look at is jobs and job creation. Exactly. What happens if we invest in a company that's working in automation? right? I'm a technologist by trade, and automation is fantastic. It drives so many incredible things, and it frees people up to work in new areas, and it creates entire new industries, but has a tendency to destroy jobs at the same time, right? So there is no hard and fast rule, and we can touch on ESG, which is a phrase that tends to get thrown around quite a lot when people justify impact investing. But very simply, from my perspective, it's, if you were to look at your own conscience, if you were to look into your own heart, will this investment make the world a better place in some way, shape, or form? And if you feel yes, it does, and that's having impact.
Yeah. I mean, I hear a lot of startups, especially not the best ones, try to have a marketing motto closer to impact because they think that that gimmick will help them disseminate their message. But I mean, I really like how you say it, because scalability with technology is groundbreaking, and we've seen it with our own eyes. This is how you actually build a massive company before starting this fund. So I really like it. So when people are doing something nice, those kind of enables us to do it more larger than a country, larger than a maybe globally, and it impacts so many people. Today we will have some founders with us, and they will talk about how they are changing the world. And I really want to understand, like, what are the verticals of impact investing? Like, what is the scene? So when we are talking about impact investment, yes, we are trying to make a world better place. So, but what are the focuses of people, especially on founder side, what they are looking for?
So I've already touched a little bit on, what Impactx is particularly looking for when we're doing impact investing, and it's largely demographic and outcome. Those are things that we look at. But if we were to look at ESG and the wider frameworks around this, what other investors tend to focus on, ESG stands for environmental, social, and corporate governance, right? Those are the areas we're focusing on from that perspective. So does this organization have an environmental impact, as in a positive environmental impact from either focusing on climate or sustainability? Does it have social concerns? Is it focused on diversity? Is it focusing on human rights, consumer protection, animal welfare? And you can say under that framework, Impactx is quite clearly focusing on diversity under social concerns, for example. That's the area where we fit into that ESG. And then the G finally comes under governance, so corporate governance in particular. So this is all about the management structure, employee relations, executive compensation, and employee compensation. So how does that organization run itself, right? So what's interesting about the G piece, it's less about companies that are focused on this, although there are companies out there that are trying to find solutions that increase equity within an organization, for example, or improve transparency. But really, it's more of a framework for how you look at how companies are running themselves as to whether they fit under that corporate governance perspective of ESG. So from an investor lens, these are the types of areas that we look at. From a founder lens, they tend to be focused far more on trying to do good in the world, right? So the great examples are some of the food sustainability businesses that we see. And that tends to be where you see the focus shifting to. It tends to be food sustainability, energy and climate, or what I would say is diversity focus, whether it's either recruitment, whether it's in community building, whether it's giving access to roles or exposure. Those tend to be the areas that you see founders largely focusing on.
I mean, when we are talking about impact, I know this is not a clean question, but how do you try to measure impact itself? Because I mean, what is like return on investment, so it's much easier, it's on the books. But in terms of the impact, do you have a methodology, especially the companies that you invest in, try to look to understand what is the size of the impact for each individual company?
Yeah, it's such a difficult one. I wouldn't say that we have a framework for determining that. I think we take each company on a case-by-case basis. But for example, we've looked at Black-run businesses that are in the recruitment space, but operating a model that we felt would reinforce current biases, right? And that's our opinion, right? It may well be the case that you speak to the founder, absolutely not. And the outcome may well be that for them, that's not what happens. But when we looked at that, we couldn't get comfortable with an organization that, through no fault of their own, simply the model that they're operating, could actually reinforce existing biases and make it harder for people from diverse backgrounds to get into meaningful employment.
Yeah.
So not a framework, but it's a lens, and it's the way that we approach these things. So we absolutely have to try and look at the financial return. We are a fund. We have to have venture level returns, and we have to have an attractive return profile to attract investors into our fund. But those investors who are coming to us are doing it because what they're hoping to do is generate return whilst improving the world.
Exactly.
Right? So does every company attack these problems of impact in the same way? No, absolutely not. And in some cases, it's a focus on supporting the founders. And in others, for us, it's a case of supporting the outcome for their clients and their customers in a demographic that they're serving. One of the areas we really like to see businesses that are all about empowering their demographic to generate additional income or increase their ability to build a living, right? So whether it's access to work, whether it's through supporting the creative or the creator economy, whether it's providing greater support for those who are in the gig economy, whether it's automating work that's actually pulling people into the wrong side of the business and it allows them to increase their creativity. These are different types of things that we look at. Unfortunately, it's very difficult to put hard metrics around that. What do we look at? Number of jobs that are created? Well, that's an estimation.
Exactly.
Do we look at how much energy you save the environment? That's a difficult one to do as well. How much petrol or diesel fuel do you reduce through doing this? These are all things that we can look at, for example, but they're very subjective and it can be very, very difficult to track. So my recommendation is generally pick an area within that space that you're going to focus on. And for us, diversity is an area that's quite broad, because really we can focus on a simple demographic measure and say, are we making the world more equal by rebalancing that 96%? And we can say definitively yes. We've done 10 investments so far, right, that have already invested
100%.
a series of diverse founders. So that's how we measure impact, as well as the ability to generate jobs and roles and the rest of it.
No, definitely. I mean, I'm sure that even if you are calculating the impact that you guys are having, most probably you are having more than that. Even people you reject might get something because of the feedback that you can give to them. So, I mean, I'm not asking that just to understand the point of view, but again, like impact is big enough, and I'm just maybe to inspire other people who are listening to you, because I also think about the same thing. As company by company, you will have one way of looking at things, and I think that you should focus on at least one kind of impact source that you can measure better than other things that you can measure.
And I really liked your point around feedback as well. Part of the impact we try to have is educational, right? Because one of the challenges we see is that people in our space, underrepresented founders, it's a very one-sided relationship that they have with the investors. It's very opaque, it's a black box, and they tend to just get told, you're too early, this, that, and the other. And don't get me wrong, we have to provide similar messaging back to some founders, but we try to speak to as many founders as we can, right? And we try to provide a level of feedback. We're not always able to do it.
Definitely.
Part of the challenge for us, unfortunately, part of the challenge for us is that, because we're demographic focused, we get a wide array of founders approaching us, solving problems in every vertical you can possibly imagine. And we can't be experts in all those areas. It's just not possible, right? But we try to give reasonable, actionable advice and support, even when we're saying, look, we probably can't take this forward right now, but here are things that we recommend you look at. Here are people maybe you can go and talk to. Here are, if we can do an introduction, we will do our best to facilitate that. And to put it into context, I'd say one of the biggest impacts that we have is that removal of that opening of the channel. Obviously, there are still warm introductions that happen. We have networks. That's how VC works. But you can apply to Impactx directly through our website, through filling in our intake form. You enter our system, and we will assess you based on some fairly simple metrics at first. And we try to have that conversation with as many founders as possible.
Yeah.
But we've got over 1,000 founders in our pipeline, over £1 billion in demand for funding within that space. And we're only raising £100 million fund at this time, right? Even if I close that £100 million today, that's only 10% of that entire cohort today,
potential.
Right?
Yeah.
The potential there is huge. So we can't possibly provide that level of feedback to everyone, but just by virtue of opening that door, giving them the opportunity to speak to us and trying to have those conversations, I believe is impactful in itself. Plus, then there's the investment opportunities that we take.
I mean, definitely in terms of especially diversity, venture capital and entrepreneurship is kind of also winner takes it all. I mean, when you look for Silicon Valley examples, you see that everybody is connected to each other somehow. They used to work with each other. One of them invested in some of them. One of them used to be like employee number 2, 3 in one of the unicorns. I mean, that's normal because this is how you do the work. And the thing is, the minorities that you are describing, they don't have that community right now because you need to build it up. It happens with like Turkey, Eastern Europe. I mean, we see a lot of good successes right now, but it takes time because this is how you build Rome. It takes time. You need to have good founders doing some kind of success stories, especially people working with this within this company, or maybe the initial investors, angel investors, then they are ready for round 2 and they do maybe 5 times of what they did the last time. So diversity, I mean, that's why I'm trying to say is you just told us like you need like £1 billion just to fulfill today's needs in your pipeline, and it doesn't even include like the second round of funding that they are going to get, and also the spin-offs and the pivots that they are going to do. It's a huge economy, and I'm quite happy that you are trying to solve one part of the big puzzle, because also like demographic wise, there are so many minorities in any given country or any kind of place. So it's really, really tough. One question that I would like to ask you, I mean, I also want to touch base with like COVID, because it's a different time for everyone. It changed a lot of things in terms of how we do business in, for example, in entertainment, how we work is definitely changed. So how do you see about the trends in COVID? So do you see that more people are interested in impact investing? Because we've seen so many disruptions happening in the world, and some of them are food, for example, because people are having hard time and we will have inflation, and poor people will have even harder time to get some nourishment and supply chains globally. What do you think about that?
So I'd say absolutely, right. The focus on having an impact, the focus on ESG it's increasing all the time, right? And we just have to look at what happened with Black Lives Matter. If we look at what's happening with the environment, we look at all of these areas. We look at what's happening with, look at the focus of Joe Biden's government in the US. There's so much happening. But what's really interesting is that we're starting to see real value being built in ESG style companies. And a perfect example of this is Tesla, right? Tesla, okay, let's ignore the Bitcoin investment that they did, but Tesla is an EV company building a vertical stack from in the energy storage space, through clean energy, from solar city to electric batteries to electric cars, right? All of that. And now Elon Musk is the richest man on the planet. Well, it flips from day to day between him and Jeff Bezos. But, he is, it's demonstrably shown there is value there. And now almost every car company out there is focusing on EV, right? Because they know they can't afford not to. But what that is doing is driving a significant shift, and that is to solar and sustainable energy sources as well. And what we're rapidly approaching is a world where energy is plentiful, right? Energy is everywhere. And once you have an abundance of energy, you have a few other things that suddenly become possible. An abundance of energy, desalination becomes totally feasible. What desalination means is fresh water for everybody, right? It also means rocket fuel. right? Because you can process hydrogen in a more effective and cheaper and more cost-effective means, which means Jeff Bezos, SpaceX, all of these incredibly ambitious spaceflight programs suddenly become a lot more cost-effective, right? So there's this cascading effect that's happening right now from a sustainable perspective. So there's a huge amount that is going on in that space, and the race is on, right? From the more of the diversity focus and human rights aspect, and what we've been seeing with Black Lives Matter and the rest. And actually, there's been a report recently that basically views the American police treatment of Black people in the US as basically a crime against humanity, right? We are seeing a far stronger focus on how do we start to resolve these problems? How do we ensure the whole of society can contribute and be part of that growth story, right? Just have to look at the challenges we've seen in places like San Francisco, where rents have gone through the roof and local populations are being forced out. And even the tech companies can't afford to rent in these places anymore. So we're seeing massive shifts going on, and the activities by people like Greta Thunberg with their climate activism as well, right? So there is a huge, huge shift towards sustainability, ESG style investing, predominantly driven by the returns they're seeing, but also because it's the right thing to do, right? So absolutely, this is a trend. I think it's going to continue, and I think it's going to accelerate.
I'm happy to see it. I mean, I would be happy to see people are more aggressive on sustainability, because it's a real solution. I mean, it's not just a gimmick. If we can have a sustainable energy, it is going to be definitely good for environment. I don't know, with that energy, I'm sure that people will try to hurt the environment more than ever. But I think we have the mindset, and it's spreading. At least we have internet, which is great, because then you get to know about this, for example, the crimes of the police that have, because yes, you know it happened years and years, but with internet, social media, it's well documented. Now you can talk about numbers, then you can make sure that your voice is heard. I mean, Black Lives Matter happens and everybody around the world supports it. It's not an American problem, because it's not an American problem itself. It's a humanity problem. So I'm quite optimistic for the future. So I really tend to work on the tech side. I like everything about it. And I think like we are about to close. I don't know if you will have any more questions from the audience, but I would like to ask you, because since you see a lot of startups and you did scale up yourself, where do you see the biggest problem when people when people are starting their own company? I mean, I'm not just talking about idea, but there are like certain death valleys. We know that. I mean, people try to do MVPs that they sell. They have their companies, sell to 1, 2, 3 people. Sometimes culture kills them, sometimes competitors. So what do you see the biggest challenge in terms of entrepreneurs for the founders that are listening to us?
That's a very broad question. Honestly, I'd say one of the biggest challenges I see is founders trying to raise money too soon.
Yeah.
Right. Don't get me wrong, as a CEO, founder of a startup, at some point your full-time job will be raising money, right? But do it at the right time, right? And focus on the right investors. Too much time spent trying to chase VC, when really you should be doing angels, family office, high net worth, friends and family, and focus on building traction. There's a good friend of mine, Andy Davis, who's the leader of 10 by 10 VC in the UK, where he always talks about just do the work, right? And it sounds so simple, but it's true. Just do the work, build that traction, get your product, get your MVP. Don't get one client, don't get 2 clients, build a pipeline of clients, right? What you tend to see is we built an MVP. It's a clickable product. We've got 1 or 2 clients using it. They're not paying us yet, but everyone has said they'd love it and they'd want it and they'd want to pay for it. I'm like, okay, well, get them to pay for it, and then we can have a conversation, right? And instead of focusing on really building that traction, but real traction, it's not about an early stage company is not sustainable. It can't be, right? Because you don't have the capital, you don't have the growth, you don't have those things. You're building the proof points that you have an idea that can be scalable and can be sustainable. When I say sustainable, I don't mean from an ESG perspective, I mean from a life cycle perspective.
Financial.
A company that's able to financially bootstrap and grow itself, right? That doesn't mean you should be running a crazy loss-making business, but it's about demonstrating that we've built a product that people want, whether it's direct to consumer or whether it's B2B or whether it's B2C, whether it's ad driven, whether it's subscription driven, whether it's unit economic, whatever, however it's funded, that you have understood what your product is, you've understood who wants to use it, and you've got a keen sense of what they're willing to pay for it, and that you're starting to demonstrate that growth. Then go to the investors and make sure you're targeting the right investors for your stage of business.
I mean, I'm really surprised at how many startups are just shooting for everyone, and they're saying that nobody's replying to us. And if you go to an investor who are just making like $10 million tickets and ask for 500K, they're not going to be interested. And they sometimes say that, oh, they wouldn't even mind giving like 500K because it's really small for them. And that's the point. They don't care about your size right now. Nobody is going to assign their own time just to check your company, even to invest in it. And
exactly. And this is something that founders need to understand when you're assessing VCs. And let's be honest, most founders don't assess the funds that they're going to reach out to. They just reach out to everyone, right? But if you've got a £200 million venture capital fund, right, and you need to distribute that across between, say, 20 to 50 startups, right, you need to be writing £1 million checks or higher, right? And the reality is the effort it takes to write a 500K check is the same it takes to write a £2 million check, right? So from a return on investment perspective and a time factor for the fund, they got to look at it and go, well, why would we spend our time writing? It's going to cost us a few $100K in terms of due diligence, in terms of staffing, in terms of X, Y, Z to do this investment. Think about the percentage of that cost that's gone into that investment for a 500K investment versus a £2 million investment. And then let's look at the long-term return. It doesn't make sense for them to deploy in that way. If they've got to spend months doing this, why would they? So one of the things founders really need to do is not just about getting access to the VCs. It's also about understanding what those VCs invest in, where they are in their fund cycle. Are they at the beginning of their fund? Are they at the tail end of their fund? What typical size tickets do they write, right? What's their process look like? Do they come in early stage, late stage? Are they pre-revenue, post-revenue? And which verticals do they target? You can get a sense of that from their portfolios on their website, which they all have.
They're quite open. I mean, they want to talk about it.
They want to talk about it. And then if you look at that, what you don't often see on their website is how much they invest, what round did they go into. But if you can find a fund and you can find the companies that they've invested in their portfolio, you can then go and look them up on Crunchbase. And on Crunchbase, you'll typically have the funding rounds for certain companies if they've been public about it. And there you can see which rounds did those investors come in. If you're seeing an investor that invests in businesses like yours, that only invests in Series B rounds, right? And you're just starting out, don't waste your time.
That's going to happen. Exactly.
Right? Because there's this idea that, well, if I get the conversation and I just tell them my story, no, it's a waste of time, right? It is a waste of time. However, that said, sometimes increasing your network, having conversations sparks other conversations. And an investor will go, well, you're not right for us. Let's have a think about it. They'll go away, they'll have a conversation, and they'll be speaking within their network. And they'll have someone in their network who's maybe looking to do an early stage investment in an area. Go, well, you know what? I came across this interesting company. Would you want to have a conversation with them? And that's how a lot of these introductions start to happen. So it is important to have the conversations, but be aware why you're having the conversation, right?
Exactly. And I mean, if you need money in like 3 months' time, you are too late already. I mean, for conversation's sake, you should start understanding who and which VCs would be interested in, just to talk about them. Of course, you are not going to ask them to have a dinner or lunch. Even coffee will be too much. Just tell them what you are doing. I mean, everybody's happy to see a good startup with attraction. I mean, just send them like few mails. I'm sure that in the third one, if you have a growth and if you ask for ideas, they would be happy to give at least half an hour. just to talk. Then it will keep the ball running. I mean, then I'm going to call you Ez, and I'm really glad that we have you today. I hope that maybe you can come back with founders. We can do like a kind of a feedback session later on. We will see, and maybe we can aggregate what you told us in few blog posts, and we would be happy to push it on the blog. So we will send you that content. I'm really happy that we had you. I hope that we kind of helped a little bit in terms of ECG perspective and this inequalities and biases to people to realize, because most of the people will think about themselves, they're open, they're liberal, they know this diversities and problems, and generally we don't, because we are not coming their way. I mean, it's sometimes we have small eye openers, but still I'm sure that I think myself as a good person, trying to be fair, inclusive, etc. I do a lot of bad stuff. I mean, not intentionally.
You don't need to talk about that on this call.
Yeah, I know. That's another call. Then I will put it in my podcast.
Absolutely.
Confessions. Absolutely. Thank you very much. I really enjoyed it. I hope you enjoyed it as well. And I think our guests can find you on LinkedIn. Maybe they would like to click on you, and maybe some of our founders will be your portfolio someday. And hope to see you have $1 billion fund soon.
Absolutely. One thing I will say, if anyone does want to reach out to me on LinkedIn, please do. But please do mention in the notes that it was through the Hackquarters webinar that you heard from me, so that I know whether or not to accept.
What is the context?
I get a lot of of invites on LinkedIn. So.
I'm sure. Thank you very much.